Hi, it's Connie from Prosperity Finance. Thank you for watching this episode. Since the government introduced some tax rule around investment property in March, we received a lot of inquiries about whether investing in new built or existing property. Because before that rule came out, it is a norm that people normally invest in existing properties. But since the new rule introduced, there are some benefits with the new build. However, there's no one-size-fits-all approach. It really depends on your situation and goals. So it's important for us to understand the pros and cons for both options and each aspects, so that you can apply those to your own situation and then work out what is the better option for you. So today I made a table for you, which we're going to go through shortly. Now, with that table, we compare a few things so that you can see clearly which is a better option for you right now. So without further ado, let's go into it. Okay, so here you can see on the left-hand side, we have about 10 items that we want to compare. And then on the second and third column, we have the new built and existing property. So let's start with the tax deductibility rule, which is relates to cash flow. So with the new built, potentially you can deduct the interest costs from your rental income. The reason I said potential because the government still yet to confirm that aspect, but looks like it is likely the case. But it's still subject to confirmation, and we don't know how long you can offset the interest for, because new built eventually will become existing property, right? So that's the new built. Now, with the existing property, if you purchase the property post 26 March this year, then from the 1st October, unfortunately, you can't offset any interest costs with your rental. But if you purchase before that date, then you have 4 years phase-out period. Now let's move on to the next part, which is the interest rates. Now you probably heard the ASB Back My Build offer. That is designed for buying off-plan property and also building property for unoccupied and investment purposes. Now the rates is 1.79 floating rates, which is a significant discount from any other rates. Versus existing property, there's no any further discount from the special rates. Now, as at today, the best rates is 1 year about 2.19% from the main banks, but 1.79 for Back My Build is a really decent deal, but it can only use for the new build or construction loan. Now, the next item is the bright line rule. Now, the government has confirmed with the new build, the bright line rule is only lasts for 5 years. After 5 years, if you sell it, there's no capital gain tax, versus existing property. If you purchase post 26th of March, then it's 10 years rule. Now, also the healthy home compliance aspects. Now, from July this year, you need to be compliant if you have a rental property. You need to make assessment to see if your rental property meet the condition of healthy home. If not, you need to upgrade to become compliant now or the next time you have a new tenant. So that involves time, money, and of course stress. With the new build, because it's a new build, everything is take the box. So you don't really need to do anything for healthy home aspects if you buy a new build as investment purpose. Now, when it comes down to deposit requirements, now the bank only require 20%, even it's investment property, but existing property require 40% deposit. So it's doubled the requirements. In terms of borrowing power for new money, ANZ at the moment treat new build and existing property differently. Now, if you buy a new build, ANZ still take into account 75% of the rental income. But if the property that you buy is existing property and purchase date is from the 27th March, then they can only take into account 65% of the rental income. Therefore, there will be less income in terms of a servicing calculation. Therefore, there will be less borrowing power as a result. Now, next item is the maintenance. We all know it's not easy to become landlord in New Zealand. With a new build, there's a really minimal maintenance required. So there will be less ongoing cost in that aspects and less stress. There's no worse than, tenants tell you, hey, I want this to be fixed and that to be fixed. I know how you feel because I'm landlord myself. So yeah, definitely not something I want to hear very often. Now, with existing property, yeah, it depends on the condition of the property. It may involve significant costs to maintain that. Now, recently I had an example from a client. He was told by the tenants that the property had a major issue and the tenants has to move out to upgrade the property. So they not only spend more money to fix that issue, but also loss in rents. Not sure if they have the insurance, but if not, yeah, that's significant costs involved. Okay, next item is the rental yield. Now, with the new build, it generally give you a better yield because it's new property. So generally with the same, when we compare apple with apple, same street, same number of bedrooms, you generally can get a higher rents due to the condition. And also less maintenance costs, less tax, so less expenses, therefore better yield compared to existing property. Now, the next few items probably more in favor of existing property. Like I said, there's no, definite answer for new build or existing. It really depends on your situation and goals. So let's talk about these as well. Now, with the locations, with a lot of new builds, they are in the area which is far from the CBD. So there's a longer time for commute, probably not very convenient. But with existing property that you can find them in the mature suburbs, which close to the CBD. Let's move on to the next item, which is adding value. Now, when your property build up equity over time, there are two ways the property can grow value. One is organic growth. The other is manually adding value to it. Now, this item is about manually adding value. Now, with a new build, there's little you need to do. You can't do anything anyway. It's new. So you can't really do much. Whereas existing property, you potentially can renovate, you can paint it, you can upgrade bathroom, kitchen, or landscaping, or maybe potentially you can add another dwelling or even subdivide it. Okay, so there's a lot of potential with existing property. Now, next item is the purchase discounts. With a new build, it's very hard to negotiate the price. It's set by the developers. There's a little room you can negotiate. But with existing property, if the vendor is very desperate, you can have some bargains potentially. And we just talk about adding value. So here is the organic capital growth. So that means just the property just sitting there, just grow over time. So with a new build, I believe because those benefit above potentially will push the price up in the short run because there's more demand. Whereas existing property, I think because normally the property has a larger land. The new build normally quite small land, couple hundred square meters for new build. Whereas existing property that at least, more than that. So over the long run, you keep the land, larger land, which is appreciated over time. So you have more capital growth in the long run. And potentially you buy wholesale price because with that piece of land, potentially you can subdivide it into multiple sections. So you're probably buying at wholesale price. versus new build is more retail price. You can't do much with the land, so you're buying at retail price. So in the long run, I believe the existing property is holds value more and is more stable. Now, lastly is to do with the off-plan property. Now, it's part of a new build. Now, new build can be off-plan or just construction type. But with off-plan, just be careful because you may have to wait a very long time, a couple of years or even longer. Potentially the market will change, the lending policy will change, and your your finance approval outcome can change as well. Not to mention about 1 year, just 6 months. Within 6 months, look at how many policy has changed, both from the government side and also from the bank side. There's just so many changes. So if you have to wait a couple of years, who knows what's going to happen? And your own situation can change as well. So you have to make an unconditional offer at the time of purchase if you buy off plan, but at the time of settlements, there's just a lot of uncertainty and your approval may not be valid. You may not be able to get a finance. So definitely more uncertainty with new build if it's off plan. So back to me. So you can see that's probably 60% in favor of new build and the other 40% towards existing property. There's no, black and white, which is better, which is not. Again, it comes down to your own situation. But overall, as we discussed, probably new build is fit better for people who need better cash flow, do not have a lot of buffer for cash flow, and less experience with investment property, less capacity with adding value, etc. Whereas buying existing property is better fit with people who has a deep pocket, good equity, strong cash flow, and know what they're doing, know what to do to add value to the property. Now, either way, it's good. Depends on your situation. If you want to buy new build, just bear in mind that if you want to buy multiple property, not just one more, but multiple more, then also consider buying in existing property at some point in the future. Because if you want to build that equity rather than saving for another 20% of deposit, you probably need to have you need to buy existing property so that it has quicker to build up that equity and enough to buy the next one. But you can have the new build now and take advantage of that, but eventually have existing property that will help you to grow your property portfolio in the long run. So I hope these tips help you make a better decision. Of course, if you want to discuss with us, we are more than happy to give you our opinion on that as well. So hope you find this video useful, and please don't forget to subscribe our YouTube channel because every week we have really good content to share with you. Don't miss out. Thank you so much. I'll see you next time. Bye-bye.